Great. So, hello and welcome, everyone. My name is Alberto Martellini. I have the pleasure to host today's webinar about startup founding in Italy with best practices from the Silicon Valley. Wow. I have two incredible speakers with me, but before diving into the topic and the guest, I will briefly introduce the housekeeping instructions and the agenda for today. So first of all, I hope you can see my screen. Yeah. Um, Today's session is recorded, and we will be sharing the recording on YouTube for those who want to listen it again or share with colleagues and friends. We will post the link of our YouTube channel in the chat. And of course, feel free to post your name as well and your LinkedIn profile if you have one, if you want to network a bit with this group. Um, and of course, please feel free to ask as many questions as you like, because I think the topic is definitely very interesting. The speakers are top notch, and we are very much interested to hearing from you what you think. And in fact, we ran a survey over the last couple of weeks. So thanks for those who took the time to respond, and we will share the result as well. Um, I'll dive briefly into the agenda. So I'll talk about a few minutes about us, Founder Institute Italy. And the topic of today's presentation, as I said, is a perspective from the Silicon Valley with our friends and colleague Serafin, and then we'll look more specifically to our market, with Italian, what we call the Italia advantage with Alberto Giusti. And as I said, we share as well the result of the survey we ran about fundraising in Italy. And then we will open up to Q&As and questions and present our next event. So hopefully the program is going to be interesting for you. Please stay till the end if you can. But first of all, a quick introduction about us. So the Founder Institute Italy is the Italian court of the International Founder Institute, which is a global organization which has run for over 15 years, starting in Palo Alto in California, where we are still headquartered. And we have moved across 100 countries around the world in more than 200 cities. So we are very large ecosystem, very international ecosystem, and the Italian court is fully integrated in it. And our goal is very simple. We want to help you entrepreneurs, maybe like some of you who are talented, driven, and they want to establish a long-lasting business. And we want to help them to avoid the common pitfalls that maybe new entrepreneurs, independently by their background, expertise, um, preferences, startup idea. We want to help them avoiding those pitfalls that unfortunately sooner or later you will find out. And since 2009, the Founder Institute has reviewed more than thousands of applications. I don't even know the numbers, but we have 8,000 graduates. We employ our own tool and capabilities to understand our entrepreneurs. In fact, we ask our participant to participate into the entrepreneur DNA assessment, which is based on more than 400,000 data points and help us to remove the biases in our admission process, because we really want to be as much as open and inclusive as possible. And we also want to help our entrepreneurs to understand their chances of success. Our program, as I said, is an international program. As you can see many dots on the map. but there are two things that characterize it. One is a very structured program. We run this in 13 weeks. Every week, you will have, if you decide to join us, you will have an assignment, and you will share your assignment with a number of high qualified mentors. There are a few pictures here from our Italian court. And from our experience, the quality of mentorship is critical. And in fact, we are fortunate to collaborate with some highly qualified pool of mentors in Italy. We have the pleasure as well to have Camilla in the audience today. She's one of our mentors, and they come from different backgrounds. They have set up companies. They come from corporates where they have mature expertise in certain industry and center functional areas, and they will partner with you in helping you. They will listen to you, and they will help you to identify the right problems to solve and to prioritize. And they do this in sessions during the weekly group sessions, as well as in office hours. And because they are part of our program and they have a stake in our program as well through our Equity Collective, which is equity sharing program within the Founder Institute, they will continue following potentially along your journey. So should you decide to enroll in our program, the next one will be starting on the 24th of March, will last 3 months. And you will have the opportunity to access, to participate in our program. If you finish the program and you graduate with us, then you will have the access to continue in the Founder Institute journey with the Founder Lab and the Venture Fund, which offer extensive training, visibility, and for a selected number of participants as well, funding. And this is all managed by our US headquarters. If you're interested in learning more about the program, please reach out to one of us via email or LinkedIn, and we're always happy to jump on a call, provide more information and possible advice whether we think this program is the right option for you and your situation. So that was a quick introduction about Founder Institute and Founder Institute Italy. Just wanted to check if Serafine is joined us already.
Yes, she is present.
She's here. Okay, perfect. So welcome, Serafine. So we're going to start with you. First of all, I just wanted to mention the kind of the discussion for today is what we hear from our Italian founders, that often they are told that basically they have to think like Silicon Valley. They have to chase the venture capital. They have to scale fast. They potentially move to the US. And whilst that we understand is an excellent recommendation, we hear that some of our funders don't fit into this framework, right? And just copying this Silicon Valley playbook often leads to frustration and missed opportunities. So we want to hear two voices, and we will reconcile this perspective. One is from Serafine, who, as I said, is based in the Valley or in California. She's our friend and colleague from the Founder Institute. So I'll let her introduce her background, which is quite exciting, and then ask her as well to comment on some of the issues in fundraising and how she sees fundraise from an international perspective. For example, funders coming to the US who wants to fund and raise capital over there. But yeah, first of all, Serafine, welcome. Thanks for joining us. Hopefully it's not too late for you. Sorry, not too early for you. But yeah, if you want to give us a bit introduction by yourself.
Sure. Thank you so much for having me, Alberto. It's my pleasure to be here. So I'm also a fellow managing director for the Founder Institute. So I manage LA and Boston cohort. In my prior life, I started my own AI startup in 2016 and ran the company for 6 years and raised three venture capital funding. And I sold my products in US, Korea, China, Indonesia, and Austria. And I decided to down as a CEO and came to US. Of course, US market is so much bigger than Korean market. So I came to study at MIT to expand my horizon. So while I was there, I was a mentor at MIT Innovation Fund, advisor at MIT Entrepreneurship Club, and very active member at MIT Blockchain Club. So I ventured myself into working at a $15 billion blockchain company called Chainlink as an EIR, worked on cross-chain interoperability protocol in terms of monetization and commercialization. And while I was working there, GP and CEO of the $2 billion AUM venture capital firm located in Silicon Valley personally recruited me as a director. So that's how I got started with my VC career. And then I moved on to another VC firm as a partner, access to $100 million investing in AI and Web3. And now I'm with Founder Institute, and I recently started my own venture capital firm called Exit Capital. So I am cutting about $15 million check into this robotic company through SPV. So my investment horizon is frontier technology such as robotics, autonomous driving, memory processing unit chips, and etc. So those are my areas of interest, and I'm excited to be here and share my 2 cents with you.
That's an awesome background. Thank you, Seraphine. Thank you so much. I'm gonna share, you kindly prepare presentation. So I'm gonna share this presentation. Can you see on the screen?
Yeah.
Perfect, perfect. So I'll let you just, tell us, as I said, your experience with fundraising. Obviously, you have a lot of experience. You have seen from both sides of the coin, as an entrepreneur and now as a venture capitalist, plus as leading an accelerators in the States. So share with us what you've learned, what you've seen, and as well for you, you've been an international founder moving to the US. So what have you learned, right, in the kind of journey?
Keep that in mind that I've been in US for about 3 years, so I'm still a newbie, but I think my prior life, including my new venture capital firm that I'm working on, can speak itself. So as I introduce myself, I was a founder myself, so I know how hard entrepreneur journey is. So I really love working with founders. And one of the reasons why I joined Founder Institute is that I am able to make impact earlier in founders' life so that they don't make the same mistake that I made in 2016 to 2022 during my journey of entrepreneurship. And a lot of media was publishing so many headlines saying that Silicon Valley is dead, but it is not that. Despite of those news and articles, it is by far the birthplace of category-defining companies such as Google, Meta, Nvidia, Tesla, Airbnb, and Stripe. So many tech companies' birthplace is Silicon Valley. And we have so many talent and capital and ambition. It is disproportionate share of global venture capital return. So Silicon Valley is the place to be when you want to start your startup. And why that really matter, I want to speak in terms of numbers. So 40 to 50% of the venture capital money is actually deployed from Silicon Valley. Silicon Valley alone itself is VC funding of the entire EU or Asia. So that's equivalent to about 65 to 90 billion dollar per year. And think of it, US venture capital annually is roughly 160 billion to 180 billion dollar. So Silicon Valley alone is like EU or Asia. So, and another really great thing about Silicon Valley is talent flywheel. So we are surrounded by all these big tech headquarters, such as NVIDIA, Google, Tesla, SpaceX, Neuralink, and even DoorDash, Airbnb, and so on. And those are surrounded by the Ivy League school that's funneling a lot of talent. And also, a lot of serial founders and operator turned investors are still very local. So they like to give back and to the community because they've been helped by those serial entrepreneurs who then help at an earlier stage. So giving back is so natural in Silicon Valley, and we're so welcoming because we have a lot of immigrant founder who weren't originally from here and moved from India, such as the founder of Perplexity. He still is on the O1. He doesn't have a green card, so he's an immigrant founder. But we are so welcome, and we know that US talent alone is not sustainable. So global talent, we are so welcoming. Therefore, even as an Italian founder or European founder, if you were to come into ecosystem, we are very welcoming and helpful and willing to help on each other because we believe in this ecosystem, you cannot do anything alone. And also capital and network effect. Proximity to top tier venture capital and high net worth individual is the far most exceeding anywhere city in the world. And you'll be able to walk into Mark Zuckerberg, sometimes Elon Musk, and big tech CEOs and chairmen and board of directors very easily if you live in the area. And faster fundraising is so common here. And then they will be able to write you a check if they really like you and if they really resonate with you. So you get early access to customer partners and investors, and everything is in one place. So, like, why now really matters? Because, with the AI revolution, um, strong founders are continuing to build at a smaller team. So now we see a lot of less than 10 founders already have double-digit million-dollar ARR. So so even as an international founder, you will be able to build a product and then execute expansion so easily. So with AI, robotic, and frontier techs are at their inflection point, and especially in physical AI and world model is deployed widely. This is like perfect time to build a startup. So what do we as an investor look for? Of course, we need to have the founder market fit. We really value serial entrepreneur mindset, meaning whether you're successful or whether you failed, you've done it and you've learned your own lesson. So we really value you trying because I recently spoke to co-founder of Firefly, who built $2 billion company, and he failed six product before coming to seventh product, which is Firefly. And to date, he only raised $11 million. And he's cash flow positive, and he didn't need to raise any single dollar after his seed round. So that's the founder market fit that you iterate and iterate until you find the perfect market for you to solve. And defensibility, in terms of technology, when you're building AI SaaS product, is getting harder, but you need to have the moat of why you are the best person and a best team to build what you are doing. And large and expanding market, meaning that global scalability is so critical that you can not only target US market, but the product itself needs to be easily scalable into another market. So the access is the moat. And as you know, only 1 in 1,000 startups get venture capital funding. And another fun fact is that over 80% of VC funded startups are based on referral. So we are very, very heavily relationship driven allocation. So you need to know someone to get funded. Otherwise, you need to expose yourself to be in the ecosystem. And a lot of founders that I work with from international, they come to Silicon Valley and pitch their startups at many of the pitching events. So that's the exposure that you are giving yourself to build a relationship. But without that, it's really, really hard to get into the ecosystem. That's the reason why being here, especially when you're fundraising, totally matters. And then also speed and conviction. So nowadays, I'm seeing a lot of founders building the product within a week, especially enterprise SaaS or consumer tech startup, and then releasing, publishing, and then collecting the data, reiterate, and publish again so many times. So speed and conviction really matters if you're building a software startup. And then alignment with founder and founding team is critical. You want to onboard people that really synergize you, not someone that who will bring down. Because number one startup failure is or at early stage, it's co-founders, founding team breakup. So we wanted to make sure that the alignment with founder in terms of background and skill set is so critical. So that's a pretty much 2 cents in terms of how I see Silicon Valley. If you have any question, feel free to raise your hand and I will be more than happy to take questions.
Awesome. Well, thank you, Seraphine. Any question for Seraphine? We will have later as well a bit of round table, but if you have any question, something that grab your attention from Seraphine experience in the Silicon Valley. Okay. We'll keep the questions for you later. I'm pleased as well to move now. Different perspective, Alberto. First, I'll ask you to present yourself. I know you're very well known in Italy and abroad. You have an amazing profile. I'm very intrigued about your perspective of exponential renaissance and Bottega mindset. Yeah, can you tell us a bit more about yourself? Just changing slides as well in the meantime.
Yeah, thank you very much for inviting me again. And well, I'm an ex-founder. I did four. I sold four from 1998 and 2006 of six that I did in that age, and then I changed my life and I became an investor. So I'm an investor from 2006, and and I began making some kind of activity as a business angel. Then I became limited partner in two venture capital funds in Silicon Valley, and uh, and then I started an accelerator in Italy in 2014 to close it in 2015, only to understand that it's an activity that will not be done in outside Silicon Valley. And now I'm a general partner of an holding that I founded with several partners, and I try to have a focus on the model of the startup studio. So I have two now, and I'm funding other four in vertical in industries. And so I try to create the the model to innovate the system. And I would like to share with you some kind of understanding that I did in my career up to now. And I suppose that it's better that I would share the presentation, the same presentation. It's okay for you, Alberto?
Of course, yes. Do you want to share your screen or shall I go
Yeah,
through?
yeah, yeah. I
Okay,
will.
I'll give you the controls. Yeah, you should be able.
Okay. Okay. Okay, well, an excursus about life and how the intelligence became a little bit more complex in the time. We know it, but I share the vision. And then it was about consciousness that arise in the people, and technology enable us to modify the world at service of the man. And the evolution comes and everything is getting a little bit more complicated and more perhaps not, but yes, more because we are explorer and we are in this kind of paths. So the exponential growth, it's part of our life. We don't have really the perception of this because if I tell to you to make uh, 30 linear step with the first one of 1 meter, you have the perception of the distance that you cover. But if I say the same in an exponential way of 30 steps, you don't have the perception of the distance that you will cover that will be 26 times around the Earth. So we don't have really the perception of this kind of new phenomenon because we are not taught about this. And but this is how the technology works now. And the when there is a new things, there come new trend, and the innovative startups adopt these kind of new trends, and the early adopters embrace the new model, and so innovative companies, and then it becomes a new normality. The company that didn't manage to adopt this kind of new normality exit from the market. But in the past, it was about 20 years, the process. Now is about 5. So the difference is about speedness. And with AI, the speedness is even more. So we have people that are 57 times more more fast than the other one that will not use AI. And there are people that are afraid about this, and it's normal because we don't are used to use this kind of new tools, and there is someone that try to have kind of prediction, not so easy, and because it's really new. It's new about the kind of reasoning that we expect from this. It's not about reasoning, it's statistical response, but we believe about we are used to see reasoning in every kind of response that isn't similar to the one that a human being could give. The reality is more complex. There is complexity, ambiguity, volatility, and uncertainty that is part of our life, and there are so many risks now. We know about this, and we know also about the geopolitical ones that are not the smaller. But the real question is about us, which is the kind of innovation that we did in our life in the last 5 years. So it's about every one of us. What is in a different way? Normally nothing, only because we are used to be moved from the amygdala that make us paranoid about the new things. We are 10 more times alert to danger than to exposed to the opportunity that we could approach. So this kind of human approach makes us evolve in this way because we are the, the, the flow of evolution that enable us to come here. And in the past, it preserved us from die, but now it's different. Now it's supposed to be a problem to be so afraid about new things. And so we have to understand this kind of new magic thing that is technology. How does it work? And normally we overestimate the change that will occur in the short term and underestimate the change that will occur in the long terms. And it's normal for us. And but this kind of new technology is a magic things. But in this kind of path of evolution, what is happening? Well, in the valley, that is the focus, because there is no place in the world like the valley now. But there are some sign and uh, some signals that change are happening in a different way. And so, if the evolution is about taught us that the most it's not about the biggest that survive, but it's about the most adoptable. And so we are in this kind of new path to understand which will be the new normal. In this kind of focus, we see that startups could raise less capital to adopt new model, and they normal now they try to remain lean and agile because they try to evolve in a different way. And now we have a kind of approach to be the the smallest organization that could enable us to make the new things. Well, there are several examples, Lovable or OnlyFans are a company that has a turnover per employee that is really astonished compared with the past. And it's supposed to be a new cycle, and it's supposed uh, to be a new way to create a real product and to have real impact without access to, well, billion of dollar of capital. And with less capital, you have to be realistic, and you have to be really focused on the value that you create. And now it's really more about ecosystem, and the valley is the best one in the world. But this kind of ecosystem are arising also in different places, and there are different kind of actors in the new world that are arising. So uh, it's uh, it's about the most efficient companies that arise in this kind of ecosystem. And also in Italy, we are showing this effect. We know Bending Spoon that is changing a paradigm about companies that, well, it's a kind of new form of private equity. It's not about venture capital, but they manage to make things that before were not understandable in this geography. And so the classic sequence about growing the normal way, like it was in the past, now is changing, and there are markets that are more fragmented with several rules that are changing, and with progression are not so linear as in the past. In this new kind of rules, the Italy could have a position, only because it's not about markets that are yet changing, and there are several, but there are several also other industries that are not yet disrupted by the new champions. And I'm trying to understand. I'm trying to say that. There are several markets where Italy has a position, as I don't know, the yachting, there was the fashion, there was the mechatronic. Well, there are several kind of industry that where Italy could have a position, and with capital scarcity, there is the necessity of more discipline, and discipline is about resilience, and resilience is a competitive advance when you began you begin in this kind of rules, and then you scale up. And so in Italy, there are some kind of strengths about craftsmanship, creativity, innovation, cultural heritage. We have some such kind of things that are unique. Well, I'm involved in startup study about yachting and so nautical industry, about archaeology, about creativity, about several things where Italy has a position in the world. And this kind of focus is a kind of new operative system, and that is much more efficient compared with the normal efficiency about venture capital. In the normal venture capital, there is a lot, there is not so much efficacy because normally two or three investment repay the tens that are made from a venture capital. And so there is space to innovate. And the normal venture capital market is the same in the last 100 years, well, 800 years. So there is the space for a new way to make these kind of things with a kind of process where there are a factory of startups that does not make the startup evolve if it does not surpass the stage of the gate of the stage where there are the progression. So it's about a new model. We could call it a new renaissance for the startups, only to have this kind of heritage about Italy. And the grants to the people are the new way to understand which are the more the more talent ones. This kind of path is also followed by several actors, also in Silicon Valley, because the less money to enable people to do things enable us to understand things also only to scout the right people and not to be involved in necessarily in their first companies that they did. So the difference is about the past there was slowness and now fastness is the speed is the new normal. And but the focus about education is the focus that was the focus in the past and the focus now. So about to have the right people in the right path of education of evolution is the new normal things to understand in this kind of path. Also, the actor of Silicon Valley understand this naturally. Y Combinator began investing in startups that were at a problem solution fit stage, and so at the stage of after validation. Now they are trying to intercept the right team also before the problem solution fit validation, also before they manage to understand which is really the solution that are proposing, but only with the hypothesis. And they follow the paths, the right path, because well, they are the best one in the world. They have the numbers that tell this, and so they are trying to make this kind of new paths becoming from very early in the relationship with the founders. And the metrics are all the same. So the percentage of exit and the average speed from idea to prototype and the average return for funders and investors. But there is also the evidence about new geography that are beginning to make unicorns. And in this path, there are several phenomena that are happening in the European Union, and also in China. There are new actors that are beginning to be proposed in the stage. But we know that nearly half of the unicorns in Silicon Valley are made from foreign people. If these people are not, they are not no more obliged to go in Silicon Valley to have the same kind of well, now it is. But in the future, we don't know if it will be an obligation for them to create the new unicorns, and so there are new geographies that are emerging, and also the tariff that we have now, it's a kind of new opportunity for Europe compared with the Silicon Valley. So not general approach, but industry specific. So to have a path for every industry with the experience of people of the industry to make the disruption in sector where there is not the heritage of sector that are made in other geography, but with the heritage of sector of industries that are the ones that become that become the same in Italy for the last 50 years. And I was talking about also microgrants, and so all the kind of activity to give little money to people to understand which are the right one and to explore the talent of the people. And the with this kind of dimension of the company that are begin smaller to enable them to make much more money compared with the past, there is this kind of asymptotus about the one person company, and someone someone is talking about one person unicorn. In this kind of new paths, the ones that has less capital in the past and that are more efficient could have a competitive advantage compared with the other ecosystem. So the startup could be no more only about investing in companies, but also investing in people. The income share agreements is the model that is emerging to invest in the right people that could make startups that are at the beginning only to learn in the right way, and then they could have impact with the other activity that they made in the future. And so funder driven, no more only they are driven. And so there is this kind of new signal about new opportunity that arise for the smart people around the world, and with AI, it's changing the rule. So one person, one startup that launch a product, build a community, generate revenue, and then scale with a structure. It's a new kind of phenomenon. In this kind of new phenomenon, Italy could have a position, and we will see. Thank you very much.
That's great. That's great. What a journey, Alberto. Thank you so much. Thank you so much. Lot of interesting information. Before we dive into the discussion, I want to ask, is there any question, and if Aliona can read maybe some question. I've seen on the chat has been pretty active for both Serafin and Alberto, and then I'll go into the survey side to open up for other questions. But first, any questions you, Aliona or Azra, can you read some questions from the chat?
Yes, so there is one question that was asked earlier from Andrea. And I'm not sure if this was aiming to Serafina or Alberto, but whoever, I mean, the more insights, the better. So the question is, what's the best way to find and attract people in a team for a solopreneur in order to build a very strong and effective team?
Well, I try to begin. It's the real problem of all the founders, and it's not yet there is not a way to solve it. But I suppose that it's about the ambitious of the project and about working together in the right way to understand each other. So I know so many people that began working together in several ways, and then they choose the team where their work works better. So where the speed was higher to understand things. At the beginning, it was about understanding things, not about making revenue or something like this.
Great. Thanks, Alberto. And Serafin, you talk about founder market fit. That was something as well you talk about, Alberto. Any thoughts?
Yeah, finding co-founders and founding team members are really, really critical at very early stage. But be very careful of giving the co-founder title. Test the person first by working with multiple projects at different angle before giving the co-founder title so easily. Because when investor receive a pitch deck from you 3 months ago, you had a co-founder of this person, but now you have a co-founder of another person, and then next 3 months you have another co-founder. That signals really badly to investors. And a lot of business focus founder does that. They tend to change CTO as a co-founder. And then when I receive the deck, a few weeks later or a few months later, then they have another one. So it's not a good practice. So be very careful. Give them a few months or few projects to work together, and then put them on.
Great recommendation. Thanks, Serafin. Can I get, sorry, Alberto, can I get the share screen? I want to share
It's
briefly.
fine, Alberto.
You can see mine.
We can see yours.
Okay, perfect. Sorry. Just very briefly, I will continue with questions. Any other questions you got? Sorry, Ariona, I'm going to share.
There is one from Serdar. I'm not sure if he wants to ask.
Yeah, please go ahead. Yeah.
Himself, or should I just read it?
Yeah, you can read it.
Okay, so he asked this one to Serafina. What can be the win-win case for both FI and entrepreneurs?
So by being part of Founder Institute, you instantly get an access to mentors. And I think Alberto might have mentioned about our brother company, VC Lab. So we also incubate venture capital funds. So past 5 years, we incubated over 800 venture capital funds that also co-invest with us. That means once you become alumni of FI, we will match you with our FI investor network that's in the database. And once you become a fundable, then we will match you based on geography, how much you're raising, what valuation, which sector, and etc. And then we'll match you, and we'll send out an email to our investor network. And then once they're interested, then they will be contacting you directly. So that's a huge benefit as part of FI. And then from FI perspective, attracting highly talented founder who can build unicorn, or perhaps nowadays decacorn, is our mandate. So we're always looking to partner and support founders who are resilient and who are good at problem solving.
Awesome. Thank you so much, Serafina. And I have another question from Serdar now. This time is towards Alberto. He asked, what are your top 3 criteria or questions to invest in startups?
Well, I have a single question that I made to every startup when I met them. That is, please tell me the experimental validation matrix that you have from now. And normally when they ask more, I said I would like to see the go-to-market matrix about the last 12 weeks with a cohort analysis weekly. So because if there is a team that is making experiments with a time frame of the week, and they did in the last 12 weeks, so 3 months, it tells me that it's a good team because they are making this kind of activity like scientists to make the exploration in the domain of the go-to-market of the startups, and they're exploring it like scientists, not to sell something to someone. And this kind of activity, I would like that them did before making a minimum viable product. So I'm a big fan about fake it until you make it, and I'm a big fan about not being biased about something that you created and you would like to go to market with this, but only to understand the context and the domain where the startup will operate.
Great insight, Alberto. And connecting to our program as well, we spend quite a bit of time on validation and trying to get the metrics and the understanding of the idea of the business case. So thanks for that. So I'm sharing basically the results of a small service we run, and thank you very much to those who reply, and thanks as well for resharing the service. So this was really understanding what the kind of the issues that my concerns are from Italian founders in raising in Italy. Just in terms of startup profiles, we got majority were very early stage, so idea MVP stage. majority as SaaS, and surprising some deep tech and AI. Well, AI not the surprise, but deep tech perhaps. And then the majority were looking to fundraise. So some of the other insights were understanding of the accelerator, yes, somehow I would say 50%, but they haven't applied yet. One of the concerns were actually the equity dilution, as they think participating into accelerators or could impact their cap table for later funding, and they recognize the importance of the VC and angel network. The other thing is, again, strong emphasis on VC and angel, and what they expect to receive from investors is not just the money and the capital, but also the expertise, the network, the support, and the alignment with their goals and strategy and purpose. One of the things that concern them is the lack of limited capital. They think they have to possess an international mindset, and their exit view is towards acquisition rather than IPO. There's nice preference, maybe with realization that their strategic position might be somehow easier. I wanted to ask to both Serafin and Alberto if they have any thought, these numbers surprise you, something, or you have any point or thoughts on any of these elements of the survey? I have one point maybe on the equity dilution, but I'll keep this for later. It doesn't necessarily represent the whole market, right? This is a small service, but I think maybe some of the people in the audience may have replied and may have some thought as well on their concern on the Italian fundraising. It's quite interesting that realization that capital is a commodity, right? It's more important to get the support and mentoring and guidance, perhaps a network as well. So I think all key ingredients. Yeah. Sorry.
Yeah, I now I have 987 partner shareholder in the company where I'm partner to, and I'm trying to create a kind of rating of the investor. So everybody will make a rating of startups, how good they are, and so on. But how good are the investors? And I'm trying to create a kind of algorithm about calculating it. And I would like to have this kind of metric tied to the discount of the next safe round about the startup studio, something like this. Only because so you are an incentive to work in the proper way with the startup, because everybody would like to say that they are smart money, but how smart are you? And I suppose that this could make the ecosystem be better, and could make also the investor have a path, have an evolution of their activity, and to become smarter. And now they have not an incentive about this.
It's a very interesting perspective. You should talk to Andrea Resi, who has been who founded the Founder Institute. The first, I think, venture he did was actually raiding founders, investors, because he felt as an entrepreneur to be treated very badly. So that's might tell you some interesting story there. But yeah, no, very, very good point. Particularly markets like less risk, perhaps like Italian or European, it'd be quite interesting to get into this knowledge of the investors. A question for Serafin on the equity dilution, because I know this is a topic we have been asked at Founder Institute many times. We have like an equity collective program, which basically is a warrant where our participants sign a 2.5% equity to the Founder Institute, split in the different to the different stakeholders as a local leader, mentors, and Founder Institute as organization. But we feel, and we, just wanted to ask Serafin what she thinks about it. Is it the same conversation you're having as well with founders in the US, or is they're less concerned about this equity dilution? They see more like an alignment of synergies, right? Because obviously it's aligned in goals and incentives in a way.
I know a lot of founders ask those questions even prior to coming into our program, because now we have so many free and complimentary tools that are actually available to many other founders. But keep that in mind that those educational tool is one-way interaction, not the two-way interaction. So the mentors that we onboard on each chapter are very different, and they have very different diverse set of skill set. For example, the mentors that I personally onboard is like a GP of venture capital fund. He was a former partner at a NEA. And those kind of people, if you reach out to them, even if you pay them for 15 minutes for $1,000, they will not have a meeting with you. But you are getting direct comment and feedback and interacting with them directly through our program. We have so many people like that as well. And I have another mentor that's like a head of growth at Scale AI. You will not be able to reach out to him directly and have a meeting. But these are the people who does one-on-one office hour with you and think about your problem together. So I think that's where the network that we have comes in value really critically. And compared to many other accelerator, ours is equity warrant versus equity or SAFE. So we will participate in your next equity round. We don't want you to value yourself at $3 million and we take 10% of your equity. We don't think it's fair. We want you to grow to $10 million or $20 million startup, and then we'll buy your 2.5% of equity. So that's the whole approach that we have as part of equity warrant. And I have a hard stop in 1 minute. I have another meeting to jump in, but it was my pleasure being part of this conversation. And please, let's keep in touch.
Awesome. Thank you, Serafin. Thanks for joining. And we're actually on top of the hour. So I want to thank as well Alberto for the time. Any other last thoughts, Alberto? Anything else come to your mind? Just in a few seconds, 30 seconds.
Not really. The only thing is about founders at the beginning. They also, well, mainly first-time founders, they believe that raising money, they could buy the things that they need at the beginning. But at the beginning, it's more useful to have the right people on board to give the things that they are looking for, because normally the money could not buy the things that they need at the beginning. So it's not about money, it's about the right people on board.
That's awesome thought to conclude. Well, thank you so much, Alberto. Just wanted to finalize with reminding you our next event, which is going to be in Italian. We normally run our event in English, but it's going to be in Italian, so that's great. And we will talk about the Italian ecosystem. Some of the founders, some of the mentors, they're part of our programs. What tools, what the strategies they have used in their entrepreneurial journey. And last but not least, no, that's it. That was it. I put already our contacts. I will put again, just if you want to connect with us. But again, thank you so much, Alberto. Thank you so much, Azra and Riona, for supporting, and all who joined us, both as a mentor of our program and hopefully founders who will join us at some point. Thank you. Have a great rest of the afternoon.
Thank you so much, everyone.
Thank you, everyone. Thank you,
Alberto, for all of your input.
Thank you.